We're still in Chapter 3, and I'm going to do a short problem for you from the textbook, but I'm not going to do the complete problem because it would take too long. But I'm working some problem, let's see what number it is, 313A. So problem 313A in the back of Chapter 3, if you want to follow along with me. I'm going to start with, first of all, by putting my pluses and minuses in my T's. I always suggest to do that before you start. And the previous video, I showed you the little acronym DEA and CLR, which is the Drug Enforcement Agency accounts. To remember DEA, but it's really drawing expenses, assets, have the plus on the left, which is the debit side. So cash, accounts receivable, and equipment are all assets. So I put plus, minus, plus, minus, plus, minus. Account payable changes categories. This is a liability. It's one of the CLR accounts. So it's this is an error here. It's minus, plus, minus, plus. So I put minus and plus on the liability. Capital and revenue are also CLR accounts. Minus, plus, and minus, plus. And then I go down to the expenses, and those are the DEA, E for expense, plus, minus. So once I get my plus and minus in, I'm ready to fill in the T accounts. We start off by the owner. He invested $20,000 to start the business. Let's say he's a landscape architect. He's an architect. He draws pictures of landscapes. So we're going to go to cash, and I'm going to add $20,000 to cash. He opens a checking account. So he's got $20,000 in his checking account. That's his own money being invested in his business. So that is his capital. So capital is being increased by $20,000. You can see I have one of them landed on the left, the debit side. The other 20 landed on the credit side. We've got to have it in balance. It's like a scale. If you put an amount on the left, you got to put the same amount on the right. If you put a stone on the left and brings the left side down, you got to find a stone the same weight on the right side to bring it even. So if we have both 20,000 on the left and the right, which is debit, credit. B, he purchased, excuse me, I'm skipping B. I'm going to the letter C. He purchased equipment on account for $5,000. So he needed equipment. So we're going to go to the equipment, the letter C, $5,000. He's increasing the equipment account, and he did not pay cash for it. He bought it on account, which means like a charge account, but he owes the money. So we go into accounts payable, and he is now increasing his debt. He had no debt, but now he's got $5,000 debt. So here we have one of them ended up on the credit side, the right, the other account on the left. Both sides of the line, the same amount. The letter D, he received cash for services that he performed. So he did some landscape design work, and he received $6,000 in cash. I want to go to cash, the letter D, and I'm adding $6,000 to cash. Why am I adding it to cash? Where did he get it from? He earned it. So I'm going over to revenue, which is fees earned, and I am adding $6,000 to his revenue account. Then we're going to the letter E. He paid cash on the account that he owed in transaction C. So we can see transaction C, he bought some equipment and he owes that money. Well, he's going to make a partial payment. He's going to pay $2,000 on the amount that he owes. So I'm going to reduce his account by $2,000 because he made a payment. And that is going to be the letter E. And I'm going to up to cash. and I'm going to take it out of the cash because he probably wrote a check for that. So I have a credit to cash on the right and a debit to account payable on the left for the same amount. F, he's paying rent for the month, $900. So again, we're going to decrease cash by $900, and rent is an expense. So now he's showing he had an expense of $900 and he paid it. So that's the letter F. He paid it. We have a debit to rent, a credit to cash. He paid the phone bill, which is the letter G, $200. We do the same thing. So we go into cash, decrease cash by $200. Telephone, and he's got a telephone expense to show, $200, and he paid it. So it went up to cash. So we have a debit to expenses on the left and a credit to cash on the right. Then we're going to go to H. He earned some more money, $4,000. He did some more work, some more landscaping work. He earned $4,000. So I'm going to fees earned, and I'm going to put in $4,000, but he didn't get paid yet. Those people charged it. He earned it on account. So we're going to go up to account receivable. We can't put it in cash yet because he didn't earn it. Excuse me, he earned it, he didn't receive the cash yet. They still owe it to him, so we're going to add it to accounts receivable, showing that that customer still owes him $4,000. Now I'm going to go down to the letter L, and he's going to be receiving cash from that customer who owes him some money. The customer in transaction H is making a payment on his account. He's paying $3,000 of the $4,000. So we're going to go to cash. So I think I'm at L. I'm going to add $3,000 to cash. And I'm going to go to accounts receivable and decrease that person's account by $3,000 because they made a payment. So we're going to show the balance in just a minute, what the person still owes. Then I'm going to do one more, and we're going to go to the letter O. He earned some more money. He's doing really good. He earned some more money. For the remainder of the month, $3,200 he earned. So I'm going to go to fees earned and add $3,200. Now he earned it. He didn't receive it all in cash. He received $1,800 in cash. So I'm going to add cash $1,800. So that means the customer still owes him $1,400. So we're going to go to the account that shows someone owes you money. So this is the side showing they owe. So $1,400 is being increased in accounts receivable. All right, when we finish putting all the numbers in, and that's all I'm doing because it would go on forever, I'm going to balance each account, find how much money is in each category. So I'm going to add up my columns. This is called a footing. So I'm going to add up my cash, and you're going to, on the debit side, we're going to get $30,800. And on the credit side, we're going to get $3,100. Now, I'm going to subtract my small number from the large to find a balance. If I subtract $3,100 from $30,800, I'm going to get a balance of $27,700. I drew a little circle so that my students can see my balance. So my balance is $27,700 in cash. On the plus side, it should always fall on your plus side. Accounts receivable, I'm going to foot my debit side, which is $5,400. And then I'm going to subtract my credit. $300 from $5,400 leaves $2,400. So I have a balance of $2,400 on the debit side. Equipment is going to stay $5,000. Account payable, I have one on each side of number. 2,000 from 5 is 3,000 on the credit side. That's going to be my balance. Capital stays the credit balance. Fees earned, I have 3 numbers to add up, and it's going to be 13,200. A total of 13,200 is going to be my balance of my revenue. And then rent stays the same. So when I finish, I wrote all of, this is called a trial balance. We want to see if we equal at the bottom, if we balance. I already wrote the names of all my accounts that I'm using. So now I'm going to put my balance in. Cash has a debit of $27,700. So I'm going to put $27,700 on the debit side. Accounts receivable is a debit, $2,400. $2,400. Then we have equipment, $5,000 on the debit side. Accounts payable falls on the credit side, $3,000 on the credit side. Capital is on the credit side, $20,000. Fees on the credit side, $13,200. It's hard to write over here like this. Anyway, it's $13,200. And rent and telephone are both on the debit side, $900 and $200. Now you're going to add both sides, and I did add it beforehand, and it comes to $36,200 on the debit and credit side. So you want this to come out equal. If it does, that means you probably did this correctly. If it doesn't, that means you have an error somewhere, and you have to find the error. First, I would re-add and subtract to make sure that I got my balances correct. If they are all correct, then unfortunately you have to go back through the transactions again and make sure that you put the same amount on both sides. So I hope that helped you understand a little bit better, or gave you more knowledge on how to write the debits and credits in your T accounts. Next, we're going to go to Chapter 4, and we're going to start writing in the journal, which is the real book that accountants use. So I hope you're doing good, and if you have any questions, let me know. Thanks.